All right, boys. Trade recap on the day. I took a couple trades throughout today. Obviously, no stream today. I'm getting over being brutally sick. I caught some bullshit ass disease from a porn star in an elevator. So now I'm fucked. Okay. So that being said, we're here with the trade recap. We're gonna go over the trades I took today. Today was a massive day for me. Realized gains, well, not realized since I haven't gotten the payout on them, is about $6,000 in my XFAs, and then I passed I think I passed two accounts. We can find out. Okay, never mind. I passed one account. I passed one account and then three accounts. I thought it was two. I passed one account and then three accounts. I got like a grand, a little over a grand, something like that. 1.2 on my new sets of evals coming in for October. But here is one of the accounts that passed today. Not worth showing. It's a fucking eval. But you should not be spending more than fucking a couple days at most on an eval when you're making this a profitable business. So I plan to finish those evals hopefully Monday. I had planned on doing it today, but I didn't realize that I was off by a little bit. So I actually overcompensated on the account that I passed by accident, and I have two accounts that I overcompensated on as well from today because I just wasn't able to set my TPs in the right places and all that good jazz. So it's whatever, no big deal. They'll be finished by Monday, Tuesday at the latest, and then I'll have 5 XFAs going into October once I finish off the last couple that I'm running from September. And then from there, maybe I'll scale into Apex. Depends on how I do. I'm going to be sizing heavier this month. We've had great price action. That's not why I'm sizing heavier. I just want to size heavier because it's time to fucking grow our balls on. You know what I'm saying? We got to get that shit. We got to get going. We got to make the paper count. What are we talking about? I want to hear that shit fucking flap when I pull it out. You know what I'm saying? Anyways, that being said, Schmiggity schmig, we're going to go over you might notice the new chart colors. I adjusted that shit. If you want it, I'd be happy to send you my template for it. This is the new Troop Toolkit fucking color scheme. I thought it would look a lot better using our colors and shit. It looks cool. So we're going to go over the trades I took today in depth. Understand the short I took, this big fucking move. Can be broken up into multiple pieces, so we can go over all the different entries on this that you could have taken. I was actually in this way over here for other reasons, and I sized more in on the pointers coming in on NQ, and then I sized in more in here, sized in more in there, trim. We'll go over all this stuff in a minute. Okay, so first off, we had PMI, yes, 10 a.m. PMI delivery. It's ISM, so it's non-governmental, meaning the news is still going to deliver. So obviously we have to wait till 10 a.m. to trade. Like I told you guys, recently I began the habit of not even fucking trying to trade before that. I actually find it a lot more relaxing when there's no news and I can kind of just kick back and know that first 30 minutes of the market, I can really just get on top of the market. And then once the news delivers, you get about 5, 10, 15 minutes. Either you hop in on the continuation, which is very rare, or 5, 10, 15 minutes you get in on the reversal, which is pretty dope. So just gotta chill with news. Dude, when news hits, you should just be relaxing and shit. So that being said, we had news delivery. Here's market open. Market open, we were in this overnight accumulation. I was actually looking to take trades in here. I was watching this shit at all-time highs. We're kind of just in this accumulation though at the high, basically. Slight displacement through Asia lows. Our New York open, we open up to our pre-market highs. No SMTs, no nothing. We just open up on our pre-market highs. News was bearish. Caused us to fall beneath the accumulation lows, fall beneath the pre-market lows, and then we crush all the way down. This is just, here's the news candle coming in. Boom, news, delivery, pre-news, news, right down, delivering right down to this order block, this FFEG set. You'll notice, you can't see them. It's because it's not on. Whoops. Let's go here. There we go. We'll let it load in. We're tapping into an FFEG set right in here. There we go. There's your FFEG set we're tapping into from this order block from way back in, or I guess yesterday. Cool. Yesterday during the lunch hour session. You'll notice we had this 5-minute pointer break in structure. Not really a break in structure, but it's a pointer right to the downside as a validation of this set of FFEGs to the downside. The reason why you did not want to take this is obviously peep the 1 minute. We moved away from the draw on the lower time frame, right? Here's your draw on liquidity. Go to your 1 minute. Even though it looks like a pointer on the higher time frame, when you zoom in, nested pointer, we've already traded away from it. So in these cases, you'll often get a lower time frame, like a 2 minute, 3 minute, 4 minute, that'll form if there's going to be a pointer. But you wouldn't want to take this, right? You already moved away from the draw on liquidity, right? We can still take the continuation model to the downside. It's just going to be a little bit rough here. Sell side sweeping liquidity, do we move the upside? The answer is Not really, nothing crazy. No sweeps, no nothing. Buy side sweep to move lower. The answer is no, right? So I would say that we are not moving away from this FFVG set. Okay. Sell side sweep to move higher. The answer is yes. Buy side sweep to move lower. The answer is no. There's your pointer break instruction. There were multiple pointers in here you could have taken. There was this 5-minute here that you could have taken right here as a validation of these FFVGs. This could have been one entry. Now, the thing with this entry here, right, it is the draw on liquidity did not create its own low time frame inefficiencies, right? Zoom in on this. See, draw on liquidity did not create its own low time frame inefficiencies. The indicator would tell you if it did. It did not do that. So if you're taking this trade, you would size lower. For me, I use a 5-10 split or a 3-6 split, depending on my the scale of my account. Recently, I'm actually considering even doing a 10-20 split. I've been talking about that for a while. Not sure the math on that yet. I'm doing that this weekend, figuring out how much buffer I would need to sustain a 10-20 micro split. But if you're using a 5-10 micro split or 3-4 micro or 3-6 micro split, it's perfectly fine. I keep a double ratio between NQ and ES. So my split is typically, if I'm taking 3 contracts, 3 micros on NQ or on MNQ, then I'll take about 5-6 contracts on MES. But I do about a 3-6 split or a 5-10 split, depending on whether or not the draw on liquidity or the pointer generated low time frame inefficiencies before it, and it did not. It's just reacting to an FFVG, so it's slightly lower confidence. But what is good about it is we haven't reacted to this FFVG set, right? We just tap into this area of demand, and now we are guaranteed move to supply. So if you're going to enter on the pointer, perfectly fine. There are many pointers in there you can enter on. You can see ECRs going crazy. So that's when you'd want to, when ECR turns on and you see that shit, that's literally telling you there's pointers on some type of lower time frame in there. So zoom in that little motherfucker. There's your tap on the first FFVG set. You're always going to take off contracts there. I always add a little bit extra, take a little off, right? That way you can guarantee the move. Now, your second step is to prove equilibrium, right? We're taking a retracement style trade. We're taking a retracement style trade. I think I learned some new technology. Wait. Oh, tech. Okay. So we're in a retracement style trade to EQ. All right, I don't want to use that shit. It's kind of homosexual, actually. We're not going to be doing that shit. So we have our new draw on liquidity at the low. We take out the low. We have a pointer break structure as a validation of this FFVG set. It did not create any new low time frame inefficiencies. I believe it locks in some here. No, I guess it didn't. Was it ES? Am I tripping? No, I guess ES was taking all-time highs. So what we have to do next is we have to prove EQ, right? You've got to prove EQ. How do you prove EQ? PO3. How do you prove PO3? Validations of FFVGs, right? If you get pointer breaks and structure on validations of FFVGs as a validation of an FFVG, if you get 3 in a row, that's going to be your call for your pointer rule of 3. What you'll do from there is wait for a new draw on liquidity. If you want to take a manipulation off of a high or off of a low, you cannot use the local highs and lows built out during the accumulation. It's just not going to be beneficial. You want to use a higher res high or higher res low outside of some type of external swing, and then you can use that as a manipulation to take back in, because you're not going to have a lot of trading room when the supply and demand or the FFVGs are so close and crowded together. So what I like to do is, and this goes for everyone who watches me, this is, Squid's a way different thing, and I can trade during PO3 with Squid, but when it comes to trading PO3 with the model I teach and stuff, you want to just look for continuations, and you don't want to trade this kind of stuff, right? Because you're not going to be able to get on top of it. Pointers are late. They're always late, right? They're going to be earlier than every other type of trading model. I have a video coming out on the scope of trade, how trading models frame successful trades. And pointers are very, very close to near perfect, but there's still that little bit of room. And where does it fail? During EQ. My traders don't lose money when in any other environment besides a consolidation. And that's because they don't know how to call PO3 fast enough or know what to do in PO3 fast enough. You have to stick to those rules, know those rules. We go over them all the time. In all my videos, we talk about this shit. So we are stuck in this continuation model. I was in these longs the entire time, and there were reasons to get out from bearish validations like PO3, but because of Squid, I was still in this trade. Okay, I was still in the higher time frame trend. Excuse me, I still feel like ass. So anyways, multiple trend points. You want to prove PO3 by validations of pointers on these FFVGs. Whenever you have that's when you would call PO3, and you would stop trying to continue to inverse your bias over and over and over. We're moving away from EQ range, which is good, right? That's a good thing. We come up into this FFVG. I believe the move was sponsored by this FFVG, I believe. these are good pointers to get out of the trade on. You can inverse your bias if you'd like to. Again, I was not because of squid. You can inverse your bias if you'd like to. Squid keeps you alive for the longer term, but you can take these little inverse biases and then get out on the next inverse. The reason why I don't like doing that is because we're manipulating off the most local highs and lows of this accumulation. So it's not going to be in my best interest to want to take those little manipulations in and out. If you're going to trade that style, take the continuations from the low and the continuations from the high higher, and then maybe the manipulation off the highs back in, or a continuation from the lows back out, manipulation off the lows back in. That's fine. But don't use the liquidity built up during the accumulation to take those types of trades. It's just not going to be beneficial, not going to be worth your time. So obviously, check your lower time frames in there. You would see there would be pointers and whatnot. Another pointer breaking structure, another pointer breaking. You can clearly see PO3, right? Clearly. And then, where was it? Am I tripping? Oh, it was right here. I knew it was that FFVG. Okay, this FFVG is a new FFVG, so it brings a new supply to the market. We tap into this FFVG set right here. No new draw on liquidity besides the high-rise high right here. But if you take a look, here's where everything gets thrown in the water, right? You know how I just said you wouldn't take a manipulation off of, and technically you wouldn't, right? Technically you wouldn't, given any other circumstance. But we're at all-time highs, right? And so the thing about all-time highs is the second you go past the all-time high, it's all thrown in the fucking trash can. I've actually been doing a lot of research recently. There's a very good chance I just won't trade all-time highs. It's not that I don't think I can do it. I just don't even think it's worth it. Honestly, I don't think it's worth it. The drawdown that you can receive during that is just so, because pointers are late, it's just not worth it at all. I am perfectly fine with trading SMT all-time highs, where one equity is at an all-time high and the other one isn't. And then you can use the all-time high as a level. But now that I'm trading with such high capital, I don't even feel like it's worth it. Like I just don't see a universe in which I'd want to do that, to be honest. I'd like to trade two all-time highs, maybe even within it. But unless we have new levels to work off of, like if we've retraced within all-time highs, it's fine. But when there's nothing there, it's just, you're literally going in blind. You're going in with new liquidity. It's a new market. So personally, I'm kind of going to be avoiding taking those pure trades unless we are sponsoring the move off of one of my confluences. I won't take it. Like, this means nothing. This literally means nothing. This is where like liquidity is built out by like trendline traders and fucking candlestick patterns and like all the bullshit, like all the stuff in here. But, or you can't even see on TradingView, all like the fucking drawing tools and all that shit. Like those kind of traders, the indicator ass motherfuckers. So we had taken more draws and liquidity on ES. So this adds a lot more, how do you say it? It definitely makes the market a little bit more volatile, considering that we're still within range. It's technically an SMT, right? We're taking a high that doesn't exist on ES, breaking down a trend that doesn't exist on NQ, but does exist on ES, taking a high that doesn't exist on NQ, but does exist on ES, and then using that to sponsor the move. It's the same equities, the same underlying equities are shared between these assets, so you're going to see a correlation. Now, this pointer breaking structure is helped by the fact that we get an SMT. The reason why you don't see the SMT here is because the high wasn't a prominent high, like it wasn't a high-rise high. It was just the last high, all-time high, right? This is the last high that was just made. And so it technically is an SMT by definition. And that is sponsored, like we know, with uncorrelated moves. You'll have an equity, the leading equity, which will take the high, and a dragging equity that will react to an FFVG. That's exactly what we see happening here. So even though it looks like PO3, it's not. Why? Because the other equity just took a draw on liquidity. Now, again, is it worth your gamble? Is it worth getting in on a trade like that when you can, 300 out of the 365 days, you're going to get trades that aren't at pure all-time highs or SMT at all-time highs? A little bit different, right? In this case, I was already in this for other reasons, or I was getting in this for other reasons, but you can actually just take the continuation. There's lows here, right? At minimum, it's going to go to the FFVGs. We know that. If it gets stopped, just take the continuation from the lows that we already talked about. Instead of, the manipulation from the high here, just take the continuation model from the lows back down to high-res liquidity through the FFVGs. Again, we're still trying to prove EQ range, okay? So if we keep manipulating off the most local highs and lows, it's probably not going to be a good look for us, okay? But if you were in on this trade, that would have been one size entry. There was no pointer breaking structure. There'd be your first trim at the first FFVG. I was in this already on ES, I believe. Where was it? I forget which candle it was. I think it was that one. I forget. Yeah, I think it was this guy there. I forget. I gotta keep like a fucking order tab up or some like note document up here when I'm doing this shit. I think it was that one. I'm not too sure. Oh, there we go. There we go. And then I believe we had a continuation model that rejects EQ range somewhere in here. right here. After we dumped, we did have a pointer, not through a continuation. Technically, it is a pointer. It didn't break through the high-res low, so it's not necessarily a continuation model. So if you were trading just with PO3 in mind, I could see why you wouldn't want to take this. Although, again, this is where all-time highs get a little bit confusing. We're at all-time highs on one equity, right? It doesn't seem like an S&T, but it is. And so technically that PO3 evaporates, so that notion is gone, right? One equity is adding new liquidity in, and so you have to throw all notion of PO3 aside. You're adding a new injected amount of liquidity into the market. This can obviously be a little bit more tricky to work with. Now, there was a continuation model that literally presented right after this. Why didn't we enter on longs on these FFEG taps after our New York AM low sweep? Well, the simple, honest answer is we never had a pointer break in structure as a validation of our FFEGs down here. If we wanted to take longs back up into this, like I said, the manipulation off the lows, back in the EQ range, you'd want to see a pointer break in structure validating our FFEG set. We never got that. In fact, we got a continuation model through our low, right? Let it load in here. Buy side sweep, we move lower. The answer is yes. We're reacting to IFFEGs on both equities. You can kind of picture it. You can see we have a bullet. I mean, I'll turn it on just to prove it to you. You got to get good at being able to visualize this stuff, but you see the wick placement here? Order block right there. There's your FFEG. Boom. Right there. Okay. You got to get good at visualizing this stuff, but that is now sponsoring the move to the downside. That's the current demand in the market. If you have a pointer reaction off of this, you can take your entry to the downside. I forget which one it was. Was it this guy? I forget which equity it was. There's a couple of them you could have taken. Oh, it's got to be. Shit, where was it? Am I tripping? It was on ES, wasn't it? Oh, okay, yeah. I wasn't even there yet. Okay, yeah, my bad. My bad, Twin. There was a 3-minute and 4-minute pointer breaks in structure, validation of the FFEG. We validated the IFFEG. This is the wick on the IFFEG. It looks different in here. Okay, we're on the 4-minute time frame. There's your wick tap on the IFFEG. We validate buy side sweep. We move lower. We create new sets of bearish FFEGs, meaning we can go double our size on this. So if you're using a 3-6 split, use the 6 contract. If you're using the 5-10 split, use the 10 contract. Why? The buy side sweep, the draw on liquidity, is very inefficient. We can take the break in structure. You can test the breaks in structure. The 3-minute is a swept pointer. You would check your swept pointer. It did not get, obviously, we see that. It did not, clearly, we can see it on this higher time frame. It did not move away from that draw on liquidity. So we don't have to check it. But in real time, you could check it if you wanted to. Okay, and you take the continuation model lower until you get a pointer break in structure away from you. Excuse me. Again, right here, another continuation model. If you just keep missing these, there's another continuation model in here. 6-minute pointer. Boom, right there. Another continuation model. You can just keep re-entering on these. You can keep sizing in if you wanted to. It's like pretty easy. Okay? More FFEGs, untested FFEGs, new draw on liquidity. Sell side sweep to move higher. The answer is no. There's a big fucking dump. Another FFEG tap. How do we react to the FFEG? We move to the upside. Did we create any pointers? We created a 3-minute. I think we also made a 6-minute on the other equity. I forget where it was. Oh shit, I might be early on this one. Why did I mark that high? I forget. What did I mark that high for? Why did I mark that shit? Sometimes I don't even remember what I'd be doing. What the fuck did I do in there? Dude, what the fuck did I mark? What did I mark? Was I testing the high res? I actually forget what I marked. Oh, okay. Yeah. All right, I'm tripping fucking dick. Okay, yeah. I marked this way before. My bad. Okay, so this was an FFEG as a reaction to IFFEGs, right? So if you wanted to take this, you would have to test this lower time frame inefficiency, right? So if you were going to take another continuation model through the lows, right? Notice how we didn't create any low time frame inefficiencies yet. If you want to take the continuation model through the lows, you would have to make sure that we haven't traded away from that low. I think, was that the case? I think that was the case. Wait, I feel like I'm tripping. Wait, what fucking can? Oh, the 4-minute. Okay, IFFEG tap, 4-minute. Okay, I was gonna say, I knew it was here for a reason. 4-minute pointer, break in structure. You can see it is bringing in new liquidity. It's a swept pointer, right? See how it's slightly lower? Swept pointer, so you have to test that draw on liquidity, right? If you're going to exit on the short, you have to make sure that you haven't traded away from that already. This was the tap. We've already moved away from it, right? Obviously, We are ahead since we're on the 1 minute, but here's your 4 minute. That's what the 4 minute close looked like on the 1 minute. We've already moved away from the draw on liquidity. So you wouldn't take the short to the downside. You wouldn't take that pointer, nested pointer, right? You've proven not to take the pointer, the swept pointer, because you've already traded away from it on a lower time frame. As of, we were trying to take the validation of a continuation of these IFFEGs lower. We're not getting that. In fact, we get a new pointer breaking structure back to the upside. You see the little ECR flash in there. I forget which time frame it was, but it was one of the equities, both ECRs, both pointer breaking structure. Moving back up to the upside. Now, again, what's the first goal? First trim at the FFEG, boom. Second trim, go at the high risk highs within EQ range, and then you have to prove EQ range from there, right? How do you prove EQ range? Validations being pointers on FFEGs. Whenever you get that, that would be your sign to get out. Now, obviously, we're out for the day here at 350, and then you can see EQ range like a fucking boss. There's your pointer breaking structure, fully out. You can even inverse your bias if you'd like to. Understand that you would have to run the same process we had before. Obviously, there's PO3 done out, right? So if you had taken the short off the pointers again in here, totally fine. Out on the IFFEG taps, whichever one tapped first, and NQ or ES, or the FFEG tap, whichever one tapped first. Looks like NQ. Looks like NQ tap first. You would trim on the NQ tap, and then reverse your bias on the next pointer, and then fully get out after that, right? Bearish pointer, bullish pointer, bearish pointer, PO3, there's ECR, there's PO3. You're out for the day until you get a new draw on liquidity at the high, at the low as continuations, or at the high, at the low, at the high, at the high as manipulations, right? And then none of that happened. So end of day for us. Simple as that. That's how you trade by model. I mean, dude, this is like literally 21 minutes of fucking pure sauce, and I'm sick to my fucking gills. You're fucking welcome, boys. Okay, you're fucking welcome. Hopefully you banked on this shit. This is by far the easiest day I've seen in a fucking minute. This shit was so easy. Like, besides the all-time high like situation where ES took all-time highs and Q obviously is SMT'd, right? That is hard for newer traders to understand, but it is, it's still something to learn about. The continuations were so fucking free. The manipulation off the low was so fucking free. The PO3 was so free. You got to know your rules. I mean, these are the same rules I talk about. You got to study them, and I've made so much content on it. It's unreal. There's your little trade recap. I should be back in good standing on Monday for my streams, my AM session stream. Tomorrow I'll be posting a psych video, assuming I feel a little bit better. And then Sunday I've got the backtesting video with my students I'll be posting as well. So tune in for our videos dropping tomorrow and Sunday, as well as the live streams on Monday through Friday this upcoming week. It's a new month. Technically, the month started on Wednesday of this week, but new week, new month, whatever the hell you want to fucking call it. Lock in, boys. This shit is super fucking easy. I mean, this is really easy. October's been a blessing so far. I've positioned myself in a pretty good spot. I've got like literally max allocation of backups ready to go for the first upcoming week of the month. So my goal is to run those up higher size with a little bit less care in how I maintain those, and then just get payouts on that. And then go from there and figure out if that was my ticket to 50K. My goal this month is to figure out how to scale to 50K. That's my goal. 50K a month, that's my goal. I was very close, but I want to secure consistent 50K months and then just be able to keep that up. That's my goal from payouts. So, I'll be live on Monday through Friday. Tap in with us. Join the Discord community. It's free, assuming I'm not fucking sick with gonorrhea from a porn star, obviously. Good to go. If you want the indicator, link is in the description. Use code TROOP for the discount, as well as Troop135 or Troop 145. I forget what it is for the yearly discount. It gets you like 3 free months or some shit. But yeah, there you go, boys. There's also a free trial too. Trying to think of also I want to shill. OnlyFans on the way. Love you guys. Deuces.